Let me take a quick moment and just talk about the changes in the Libero financial ecosystem because they're evolving it at a rapid pace. And I think it's important to understand all the different things that are happening. If you're already in the ecosystem, you're likely already aware of much of this. If you're not in the ecosystem, I think it's something you should be aware of because it may adjust your investment strategy. Let me disclose up front, I do have a Libero bag. It's locked in what I'm going to be talking about today, which is their Libero Bank. I've been in Libero since, I argue, pretty much since the day it launched because I have to invest and then test it, see what it's doing before I can provide fair coverage of it. So I've taken profit from it because I was part of the test, and I've watched its growth, and I've watched their strategy, and I've watched the marketing. And there's been a lot of people chiming back in with concerns about Libero. And I've done my best to try to defray some of those concerns, but there still remains a number of different things that people are not really too happy about, and I understand why. I think they have a good vision for what they want it to do, and some of the things that people call out are negatives are truly negatives. Unfortunately, they're negatives that are part of the crypto business. Like every token does the same things. They all have the same issues. And then none of them seem to do it the way I'd like it done. That said, Libero, more so than many other tokens, is at least trying to act like a business in one sense. And that is the evolution of what they're doing. They're constantly changing and considering different things, almost to the detriment of the rest of their network. So let me start from the beginning, for those that don't know. There's a network, and it's a network, truly a network of tokens. And it's all based on Thorium. So the Thorium tokens on the Binance Smart Chain, you can see it. And Thorium, I believe it's thorium.financial is the site. Or thorium.exchange. So the Thorium token is kind of the parent token or the governance token for everything else. Anytime they do what they call an ITO, initial token offering, they're going to ask you to put up either BNB or this Thorium token or one of the other side tokens that they've, I believe, abandoned. I don't think they've abandoned them, but they feel like they're abandoned. So the Thorium token kind of governs it for the most part, and then you got BNB, and in some cases USDC. So they spin this up, and then later they spin up Epic Hero, and Epic Hero it's a token, but it's also NFTs that are around a game, and it's a staking game. So you stake your NFTs, and you can earn rewards. Some of the rewards are Epic Hero, some of the rewards are Thorium, and so on. And then you are supposed to earn rewards for just holding the NFTs. As far as I can tell, it does generate the rewards for holding the NFTs, but it's not that much. And there's a lot of complexity in their NFT model for Epic Hero. As a result, I've never covered it because it feels like it's on the decline and they've never really stepped that up. Then they have these other tokens, and these are Thunder-based tokens. So they're Thunder ADA for Cardano, Thunder Cake, which is Pancake's core token, and then Thunder BNB, and then there's another one. I think it's Thunder ETH. And these tokens give you rewards, passive rewards, in those other core tokens. So you hold them, and then you get reflections, and then you go to this dashboard, and you can claim the reflections to your wallet manually. They don't automatically come. They don't advertise those. You don't even see them on their site anymore, which is kind of interesting because the tokens still work. I actually had some Thunder BNB from a long time ago, and it fluctuates in value, so I know people are buying and selling it, and it does still generate rewards because I check the dashboard every blue moon, but they don't advertise it on the Thorium site at all. You can't even see it, as far as I can tell. So that was strange. Then they launched Multiverse Capital. Multiverse Capital it was one of the first to do what's called farming as a service. Farming as a service simply means that they're going out to the different chains, so Avalanche, Ethereum, Binance, Phantom, and they're finding projects to invest in on your behalf, and then they return you the rewards. So you hold Multiverse Capital, and it gets constant reflections. And the reflections percentages, the amounts that you get are based on the farming that it's doing. So it's a soft form of passive income, but it's around the Multiverse Capital token. The thing with Multiverse Capital, though, is that every now and then they'll allow you to stake it to earn other tokens in the eco. So they'll say you can stake your Multiverse Capital, or I call it MVC. You can stake your MVC and get Thorium, or you can stake your MVC and get Epic Hero. You can stake your MVC and get Libero, right? Then comes Libero. Libero comes in and they did a pre-sale, and the pre-sales, ITO, are all on their site under Thorium, and they required you to stake your Thorium or your Thunder BNB or your BNB or your MVC in order to get access to get a slot in order to invest in it. At the time, nobody was investing in it. I didn't see very much traffic up front, it wasn't unexpected, but I took it as an opportunity. I went and jumped in and got mine because I used some BNB that I had that was throwaway money. Bought into it, had a pretty decent bag, I would consider. And at the time it launched, I want to say it had like 3 zeros in front of this. And then it steadily just dropped the zeros all the way up to a penny. So I took profits all the way up. I just kept taking profits because I wanted to test that I could. I wanted to test the performance. I wanted to see what was going on, see what this thing's about. And it didn't let me down. So I took profits all the way up. So I was already at surplus by the time it hit a penny. I was already at surplus in terms of my ROI. I got all my money back, and now I'm just getting profit over top. Eventually sold the bag. Not all of it, but I sold the vast majority. They released Libero Bank. Now, here's where the episode begins. They released Libero Bank. Libero Bank changed the game a little bit. So the Libero Bank is there. So you have the wallet staking, which is basically in your wallet, you're getting the rewards, and they're just sent to your wallet like reflections. The Libero Bank is a second level of staking. And I want to explain how it works because I'm intrigued by what they're presenting. Although I have some issues, and I'm going to talk about both. With Libero Bank, you take your Libero, you stake it in there, and you can choose how long you stake it. So you can stake it for a week, you can stake it for a month, you can stake it for a year, 2 years, 3 years, 4 years. 4 years is the max. Based on, and it's hierarchy, but based on how long you choose to stake your Libero, they give you instantly xLIBERO in your wallet. The xLIBERO cannot be sold. So it's like a promissory note. And what they say is that as holding the xLIBERO, you get access to these benefits. Also, you're generating inside the staking pool rewards around Libero that you can withdraw those. So think of it as it's a formalized version of taking passive income. You're taking money on the way up. You're taking profit by way of this staking pool instead of having it in your wallet and then having to calculate how much money you're going to take. So let's say that you were to stake, let's say 30,000 Libero in there, which is somewhat shy of $250, I think. If you stake it in there, you're going to get, I'm going to guess, probably about $3, maybe $4, maybe $5 worth of Libero every day. You can withdraw it. Gas is going to be somewhere between 15 cents and 50 cents, depending on what's going on in that day. Withdraw it. So let's say you get a return of $3.50 for that day of just passive. You can choose to keep that Libero in your wallet and let it get reflections. And then it would compound as you keep withdrawing. So you're withdrawing and you're getting more and more and more. And then the reflections compound. Or you can leave it in there and it compounds inside of there. So let's say that $3.50 a day doesn't move the needle for you every day and you don't need the money. You can leave it in there, let it compound, and then say after every month you're going to go and do a bulk withdrawal, and then it might have been a couple $100. And I'm making up numbers, but you get the point. You can either compound it inside the bank or you can withdraw it every day and compound it inside your wallet. On the side, you also get Binance USD rewards. Binance USD, of course, is a stable coin pegged to the United States dollar, which means it's true to life value. So as it grows, it's dollars. It's not like you have to guess what's the price of it. It's not volatile. It's stable amounts. This is in addition to the Libero. So you might get let's say $3 a day. I'll throw a number. And in Binance, you might get an extra 50 cents. With the Binance, you can choose to then recompound that. And it doesn't really work the way that you might think. When you choose to recompound the Binance USD, that's the name of the option. That's why I'm describing it this way, but it's not really what it is. When you choose to do that, it will purchase Libero with no tax, and it will send it straight to your wallet. That's not really compounding, but it allows you to buy it tax-free. So you could, if you were taking the Libero and you were just stacking it in your wallet to let it grow inside the wallet, you could use the Binance USD, cash it back into Libero, send that to your wallet, and then cash out the Libero that you would accrue, cash that to your wallet, and then, of course, they are generating rewards together. You can also send the Binance USD to Epic Hero or Thorium or MVC. Sending to MVC will get you the most in terms of tokens. Sending to Thorium would get you the governance token, or in the case of additional ITOs, gives you the ability to buy into the ITO, assuming they use that. Doing Epic Hero, you could do that for games, and then sometimes they have staking type pools and things. So you have choices of what to do with the BUSD, or you can leave the BUSD in there and the BUSD compounds with its APY while it's inside there. The unique, fascinating thing about the way that the bank works, as the price of Libero goes down, the percentage, the APY for the Binance USD goes up. So you get more Binance USD as people are selling, and then you get less as people are buying into Libero. So if the price is jumping, you don't get as much Binance USD. You still get your predictable amount of rewards on Libero, but the BUSD part is what fluctuates based on the popularity of buys and sells on the Libero token. So since it's a forced form, essentially, because you're locking it, since it's a forced form of taking income on the way up, it means if you're the kind of investor that you know you're not immediately waiting to be a millionaire, you're not immediately waiting for anything, and you're not at a loss, and you're okay buying into a thing, as long as it gives you some return that you can cash out. You don't care if you win Lambo right away, and you're okay leaving it there. You could send it there for 4 years. Now, the only risk there is, well, are they going to be around in 4 years? And that is truly a risk, and that's something you're going to think about, because you're trusting them with this, which is why I said I was okay doing it, because I was already at surplus. It's raw profit. I would be at zero loss possible if they trashed. It wouldn't matter. It's just extra unrealized gain as it is. So I was okay doing it. I wouldn't suggest that somebody YOLO into it and then not get an ROI, because there's that strong risk. They could choose to do so. There are people in Libero right now that have millions of Libero. Millions of Libero is a lot of money in this, and they're getting a lot of passive income every day, a lot, because of the rate that they're offering. Those people likely would get an ROI shortly after, like 6 months, because of the way that the APY structure works. Especially they put, and we're talking in the bank, by the way, because of the way the APY structure works, they're getting major amounts of bank every single month. Every single month. Now, the beauty of this is that it also lets you dip your toe in the water a little bit. You can put some money in, lock it in the bank for 4 years. Money you don't care about, throwaway money. Test the passive income structure I'm describing. See that money's coming out. You can take profits, right? And then let's say 2 years from now, you go in and you're seeing, well, do the calculations. Geez, I made $1,000 off this, and all I had to do is let them hold it. And I put in, a couple $100. Not only am I at ROI, but I'm X, I'm 3X, 4X, and I'm surplus. Now you might feel more confident giving them a little bit more money to increase the passive income flow, and then get back to ROI, right? And then give them a little bit more, and then get back to ROI, give them a little bit more, back to ROI. But you're not having to worry about wallets. You're not having to worry about the safety aspect, because part of what they built, let's say that they get hacked or whatnot, which happened to Everrise. So we know it could happen. In Everrise's, the way they had it built out, and I'm pretty sure Libero is similar in the way they built it, they separated the way that the rewards pool is generated and staked and everything else from your core tokens, so that the core tokens were always secured away from any kind of breach. The staking piece might be breachable depending on how creative the hacker is, but they're independent. Because they're independent, it allows them to take some action. I will tell you that they've, as a network, all of them, they haven't had very many issues of breach that I can find. I've done extensive research, and it seems like they do a pretty good job of securing assets. And I want to remind you that Thorium has been around a long time. Epic Hero's been around a long time. Multiverse is a little bit newer. These guys, the developers behind this, they're not going anywhere in the short term, because they've been around. They know that They've got something with this Libero thing. What it ends up being, nobody knows. So Libero Bank changed the game because it formalizes the structure that the devs, when I say they, told you to do, which is take profit on the way up. It formalizes that, and it turns it into an actual tool. They even created a button on their site that says take 1% profit every day because they wanted you to take profit. Well, then they realized that, this is my closing, they realized that the end game is obviously to get on an exchange. As far as I can tell, none of the tokens in this ecosystem have been on a major exchange. I don't even think most of them are on minor exchanges. So they said the end game now is to get on an exchange, ideally major exchanges. As we know from other tokens, it's very difficult to get on major exchanges because of all the politics around tokenomics and fees, and there's a lot to it. What they designed in order to solve the problem really caught my eye, and I'm very intrigued on how it would work, because if they pull it off correctly, nothing would stop them from getting on like Coinbase. Nothing would stop them from getting on like Binance. Nothing would stop them from getting on Gate.io. Nothing would stop them from getting on OKX. And if it gets on those, it's going to skyrocket if they're able to pull it off. What they designed was wLIBERO, which is an upcoming token. It doesn't really do anything. It's based on a known concept of wrapping. If you've seen certain tokens have wrapped BNB, WBNB, or wrapped Ethereum, WETH, right? Or wrapped Phantom, WFTM, and the recent Phantom Libero Financial, which I'll cover separately. The wrapped is a somewhat newer, but not really, concept where you're basically, think of a bubble, and you're taking this bubble, you create it, and it can hold a different value inside of it than what created it. So in the way Libero's got it designed, one wrapped Libero might equate to, say, 100 Libero. And the value inside of it, it can expand. So it can have greater value over time. But it's still the one. You're still trading one. There's a similar concept in the stock market around, not options, but there's similar options in the stock market where you can take a group of stock and trade it as one. This simplifies the onboarding process for the major exchanges because there's no tokenomics to it. As far as the trading goes, as far as the exchange goes, it sees one for a price. That's all it is. There's no reflections. There's no nothing of that one. The only time you realize any value out of what's wrapped is when you, quote, unwrap it, which happens when you cash it out. So to picture this in your mind, if I were to go into, let's say they get onto Binance. If I were to go into Binance and I wanted to purchase wrapped Libero, wLIBERO, I'm going to pay a price. The price is likely going to represent the multiplication of Libero that's inside of it. However, the exchange only sees one wrapped Libero for, in this case, let's say it's 100 at peak price. So one wrapped Libero equal to $1. Let's just say this. And then you buy, let's say 10 of them. So you have $10 worth. So you essentially have 1,000 Libero value. You take that wrapped Libero, you send it to your wallet or to the bank, and then you, quote, unwrap it, which is it takes a tool to do that online. You unwrap it, and now you have 1,000 Libero. It's still worth the same value, but you're basically transporting it from the exchange into your wallet, but it allows them to get it on the exchange in the first place without having to worry about the tokenomics, because the exchange wouldn't be able to deal with Libero's tokenomics at all. None of them would. And that's part of the issue with many tokens. They have these fancy tokenomics, but no way to get the exchange to accept it because they can't work with it. That was my beef about Affinity and their no exchange deep stance, because they didn't want to rethink their structure to make it work on the exchange. They just said, we're just not doing it. It's our way or the highway, and that's not the right answer. If Libero can pull this off, I think it creates the model for where descend can be and can go, because it allows descend for those that want it, but it allows us to trade on the exchanges for those that want that without disrupting the benefits that were given to the token up front. So like Kiba, for example, where they just completely get rid of the reflections, and I was absolutely livid, or Para gets rid of the reflections, all because they're trying to react to what the exchanges want, and it doesn't really help them. because they still don't get on those exchanges. Whereas this one allows you to get on the exchange potentially without disrupting the tokenomics for those that actually just want the tokenomics and stay decent, working on PancakeSwap or through the Thorium exchange. You can still do that, but we get the benefit of people trading it on the exchange, which is where you're going to get the volume. That's where you're going to get the big bucks, which drives the price up. So it's a very exciting potential concept that they've got going on between the bank and with wLIBERO and xLIBERO and everything that, like I said, they're behaving like a company in how they're building it and forcing a utility upon it, that I think it's worth a look. I'm going to stress this, and I'm doing it at the end because I'm doing it to test if people actually listen to the totality of my audio. I'm going to stress, under no circumstances have I ever said, nor will I say here, that Libero is, quote, legit. Never. I will say they passed a CERTIC audit with flying colors, essentially. There were some things that some people called out, but CERTIC didn't call them as concerns, and we know that you have to really just behave, watch the devs as they behave, and test them on that. The audit only tells you so much. Them having salty admins in the telescam, they all do that. You can't hold that against them. We have to look at track record, we have to look at behavior, we have to look at them performing, and then test them upon that. It's not about whether they're legit at all, because if you've heard me say, just because it's a scam doesn't mean you can't make money, and just because you make money doesn't make it not a scam. I'm telling you only, I'm describing to you what it is that they're building, which increases confidence, at least for those that are motivated by passive income. And that's the goal. Just the key, again, don't YOLO into it. Take for profit on the way up. It's going to have ups and downs because people are going to buy and sell, but its volatility has been very low. It's been pretty darn stable. It goes up and down, but it doesn't dump like 200 per coin like Seifu did. It's pretty darn stable. And a lot of that's because of the bank, because when you put it in the bank, it increases stability. That's what the other ones lack. They talk about treasury, but treasury is only one part of the game. The concepts that Libero's doing is actually adding stability to the project, in addition to the potential for positive price movement in the future. So I see it as, if they pull it off correctly, I see very strong positive price movement. I would say leading into the second half of 2022 for sure. I would expect strong price movement if they can pull it off and get on major exchanges before any of these other ones, because like with Yearn Finance, which is another I've never covered, it follows a similar concept in how it's on the exchanges and is able to trade, and Yearn Finance jumped up to the 5 figures. I'm not suggesting this can or will or should or does. I'm saying that there's a strong price potential in the future if you're willing to give it a look. I'll wrap up by saying, for those that are asking, Phantom Libero, which is xLIBERO, is the same dev team. It's the same process. They just created it as a separate token. Same tokenomics, same basic behavior. I'm pretty sure it has still access to the bank and everything else. They chose to spin it up as a separate token on Phantom. I didn't agree with the reasons they gave, but ultimately they felt like they wanted to have independent strength, like an independent population of people. And then at some point they would build a bridge where you can bridge your regular Libero over to Phantom if you wanted to. Consider, though, that Phantom, the network, doesn't have anywhere near the number of people that Binance does. I think I would have done the straight over copy method that most have done, where it's the same token on both networks, because I think the xLIBERO confused people, because it didn't take off after the pre-sale. It didn't. It got a little jump. They launched it at the same price as Libero, so I think that was a turnoff to some people. There was some dump, not a lot. I think they should just launch it as the same Libero to keep it simple. I also think that they should get on Ethereum. This is one I would want on Ethereum, because in terms of interest, people wanting to do it. They did a whole dog and pony show in Times Square, big banner. They got it on their site if you want to see it, and that's great. The problem is, in the United States, most people are not trading Binance. They're trading Ethereum. I don't like it because the gas fees are bull, but I recognize what it is. So if later they can get Libero, I'm talking true Libero, not an eLibero garbage, but a true Libero branch over on Ethereum, this guy has no ceiling at that point. It's going to go to the moon. So I'm excited to watch that. I wish they would make smarter decisions about that part of it, but I am very intrigued by the stuff that they are doing. And as somebody who has stuff in their bank that's just raw profit at this point, I've got nothing to lose. And so I'm going to watch the ride all the way up, but none of the other projects come close to what Libero's building. That's the key when you hear me talk about Libero compared to the other projects. It's not close. Just because you have the APY is only one part of the game. Just because your rebase is one part of the game. Having a treasury is one part of the game. The banking concept, the wrapped concept, multi-chain, these are all different things. Staking for different, and farming, right? These are all things that I think if you don't have them, sustainability becomes harder. Doesn't mean the other projects won't sustain. Doesn't mean they won't succeed. You can invest in multiple projects, and it probably makes sense to do so for a diverse portfolio. I'm saying that those that are denouncing Libero should really take a hard look, because for the ones, if all you care about is just becoming a millionaire in 2 months, no, it's not for you. You could, but it's probably not for you. But for those that are considering passive income strategies, I can't think of any other project right now in the business that's doing it as well as Libero Financial. And I'm saying that from my own perspective. It's up to you what you see. I'm just asking you to take a second look at it and keep it in the mind. And again, what do you have to lose if you toss a little bit of money that's throwaway money, test the passive income strategy, get your ROI, then what have you lost? You're already at positive because you got your money back. Something to think about.